Hello, everyone. Good evening. I hope you are all doing well. So, today I am looking at doing an example of Learning Unit 6. The ledger account is already uploaded. I've uploaded a recording of that, but now I'm looking at the second part of the learning unit, which is looking at the equivalent of your ledger account, but in the format of two statements known as your production statement and your trading statement. And then your notes, there are four of them. That's your direct material note, your direct labor note, your factory overheads note, and then your cost of goods sold. So I am going to show you how to do this using the question that you see up on the screen. This is from the 2021 exam, so it is a good indicator of the type of question that you can expect in your exam as well. So please do pay careful attention to it. As you can see, it's a 35-mark question, which is quite significant. And the format of this you will need to know. So remember, you do not get an answer booklet with the templates drawn up for you. You just get a plain booklet where you are required to draw up all of these. There's no formats given, that kind of thing. So you do need to know how to draw them up. You can also see a blank form of this in your textbook. So if you look at about halfway through Learning Unit 6, you should see the section which is dealing with your two statements, as I said, your production and trading statements, and then those four notes. So let's go ahead and get started with this question. So it says to you that the following information relates to Industrial Limited for the Ultimate Industrial Limited, for the year ended 31st August 2020. They've given you a couple of opening balances. As you can see here, you have opening balances for your direct material, your work in process, your finished goods, and your indirect materials. Then you have a whole host of transactions here. And on the next page, you have closing balances. So the closing balances you have is for work in process, finished goods, and your indirect material. You do not have the direct material closing balance because, as you can see, they've indicated that you will need to calculate that. So here you are going to, and I'm just going to write down that these are closing balances and that the ones on the previous page at the top were your opening balances. So just to reiterate so that you know when you are looking for your information, the opening balances will be the one that will appear first naturally, and then your closing balances. So here you then were asked to, they said to you in the questions, prepare the following for the year ended 31st August 2020, and they asked you to prepare the following notes. There are only four notes to your production statement and your trading statement. That was the direct material cost note, the direct labor cost, the overhead cost note, and the cost of finished goods. And then you also need to put together your production cost statement and your trading statement. Now, when you are answering these questions, if you do get a question like this where you're asked to draw up your notes as well as your statements, there has to be a specific sequence that you follow. So when you're drawing it up, you have to do it in the sequence because it is in such a way that one leads to another. So for instance, your direct material, your direct labor, and your overheads must be done first, second, and third. Then you will do your production statement because the final figure for the direct material, the direct labor, and your overheads goes to your production statement. And then for your production statement, in order to draw that up, you would need as I said, the material, labor, and cost. The final figure from here is then going to go to your finished goods note. So your finished goods would need to be done after your production statement. And then once you have your production statement, and once you have the final figure from your production statement, you'll take that to the finished goods account, the cost of finished goods note, and then the final figure from here is needed for the trading statement. So that would be done last. So it has to be done in that sequence because, as I said, you will need the direct material figure, the direct labor figure, the overheads figure for the production statement. Then the last figure from the production statement is needed for your cost of finished goods account or your note. And then the last figure from your cost of finished goods note is then needed for your trading statement. So it has to be done in that sequence. Even if you draw them up according to how it has been asked here in that order, when you fill it in and you start to put in the figures, then it will have to be done in the sequence that you see up on the screen. So please do make note of that because naturally, if you aren't aware that it has to be done in the sequence, then when you're filling it in, then you don't know where the figures are coming from. And it obviously can be a bit confusing because when they ask you a typical question, like they've stated here, they aren't telling you that it needs to be done in this order. They're just saying this is what needs to be drawn up. So it is important that you do understand that it needs to be done in this specific sequence because, as I said, one leads to the next, to the next, to the next, and so on. So let's get started with your direct material note. So I'm going to draw it up on this page because I have a little bit of space here at the top. And we will actually, I'm going to draw it up on this page because I don't have much space there. So the direct material cost is note number 1. So when you draw it up, you will say note number 1 and it will be direct material cost. You will naturally write out the full word, but I'm just writing out the shortened version because I don't have much space here. So I'm just going to write down wherever I can just the abbreviations for each of the acronyms for each of these. So here we have your direct material cost. And again, you do need to know the format of it. So the direct material cost always starts with an opening balance. So you'll put in your opening balance, and that is generally provided to you. So you'll see it here. As I said, it's in the opening balances, which is the first box at the top. That's 16,000. Then you have any purchases of your direct materials, whether it's in cash, whether it's on credit, you need to list them out. So we look to your transactions for those. So in your transactions, they say to you the first item is a cash purchase of your direct material, that's 90,000, and then a credit purchase of your raw materials, which is 130,000. So you're going to note both of those. The cash purchase you will label bank, and automatically then the assumption is that it was purchased in cash, your raw materials. And then the other one is on credit, so you will label it creditors or you can label it trade payables. Either one is fine, and that will be 130,000. So once you have your purchases, you're going to then look at any other form of carriage, railage, any delivery costs basically for your raw materials. So carriage, railage, freight, import duties, customs, import tariffs, custom duties, and so on. And here, if you look at this one, it says import duties on your direct materials is 22,500. Please don't mistake that with this one, which is railage. This is indirect materials. So please don't mistake the two for each other. That is indirect materials. So it's not that one. So here it was 22,500. So it's not that one. So here it was 22,500 and it was imports. So you can write down imports. They didn't really specify here whether it was paid for in cash or on credit. So you can just label it import duties, and that's 22,500. Then you're going to look for, did they give us the final amount, which is the direct material that will go to the factory? or did they give us the closing balance, which would need to be subtracted? So your closing balance is always subtracted in your direct material note. And here you're looking for either this closing balance being given to you or the direct material that's issued to the factory. Now, if you look at the closing balances that have been given to you here at the top of this page, they did not give you a figure for your direct materials. As you can see, you have just the question mark. So that would mean that you don't have the closing balance, and you naturally then would have the other one, the direct material that's issued to the factory. And if you look at here at the bottom of this, you have direct material issued to the factory, and that's 145,000 Rand. So this final figure of your direct material note is the amount of material that is issued to the factory, and that's 145,000 Rand. So now you're going to work backwards to work out the figure, excuse me, that goes into your closing balance. So basically, you're going to sum up these, the 16,000, the 90,000, the 130,000, the 22,500. Once you've added those up, you are going to then subtract your 145,000, and that's going to give you the closing balance, which is 113,500. Now, here, immediately while we're doing the direct material note, I'm going to start drawing up the the production cost statement. So the reason I'm drawing it up already is because for your production cost statement, you need the figures for direct material, direct labor, and so on. So it would only make sense that as you're going along, you can write in the figures so that it immediately makes sense where you got them from. You're not stuck at the end wondering where the figures came from. So the production cost statement firstly must be labeled respectively. There is a mark allocated to that. So it will say production cost statement of, and this company is called Ultimate Limited. So Ultimate Industrial, I think. I think so. So I'm just going to say Ultimate because I won't have enough space. So it's Ultimate Limited, and it's for the year ended, is it August or September? August. So it's for the year ended. So for year ended 31st August 2020. Yes, 2020. So there is a mark allocated to that. And then you have your direct material and direct labor. That's note number 1 and 2. Those summed up are going to give you your total direct cost. So those two are direct costs in nature. So summed up, as I said, that will give you your direct cost. And then material, labor, and overheads, which is note number 3, will give you your total manufacturing cost. Now, again, I'm just writing the short version of it. You can follow in your textbook for the full words that will be used, but it's literally direct material, direct labor, manufacturing overheads, total manufacturing cost, and so on. So these three summed up, or you can take the total from here because they're made up of those two. So that total plus this amount here, and it will still give you the same figure for here, but whichever you prefer. If you prefer to just go with the three figures added up, that's fine. Or you can just add up material and labor and then add that total to your overheads. So that is what makes up the first part of your production statement. And then you will add on to that your work in process opening balance, and you will subtract your work in process closing balance. And the final figure that you're going to get from here is actually what you need for note number 4. It's the cost of your production of your finished goods. So cost of production of your finished goods. So this is the final figure that you will need. So this is the final figure that you will need. So let's plug in what we have already. We now have that your direct material is 145,000 Rand. So now we have the direct material note done. I'm going to erase it because I don't have much space. So I'm going to erase the figures that go into it, and then I'm going to draw up the direct labor note. Okay, so your direct labor note then is quite straightforward. It's quite simple. For your direct labor note, actually, I think I can do that on this slide. So here, excuse me, your direct labor note is quite straightforward because there are no opening and closing balances for your direct labor. So I'm going to say note number 2, direct labor note or direct labor cost. And here, there are no opening and closing balances. You will only look at any wages that are paid, and then if there are any other contributions that are made. So your wages, it says to you here, and I'm going to highlight it in a different color so that it is easy to identify what we have done, where we're looking at. So here it says that 80% is your direct labor of the 420,000 Rand. So you're going to work out 420,000 Rand multiplied by 80%. And that's going to tell you that your actual wages for your direct labor is 336,000 Rand. Now, you do need to show the working out of these because there are marks allocated to it. So please make sure you show that. And then here at the bottom, they mentioned that medical aid contributions for direct labor was 2,880 and UIF for direct labor was 3,450. So medical aid is the next one. So again, you obviously will, if there is any working out, you'll show it, but here it wasn't anything that needed to be calculated. So 2,880 and then UIF was the 3,450. So now there are no other contributions. You will add those three up. So when you add it up, it's 342,330. So that immediately now will go to your production statement in line with your direct labor. So 342,000 here, 330. So already you have the sum of your direct material and your direct labor to give you your direct cost in total. That's 487,330. So I'm going to write the total here. And that's a lot of your production statement already done. So now we're going to do your factory overhead note. Now your factory overhead note is also a little bit long. So you're going to say factory overhead cost or factory overhead note. Again, please write out the full words. Then you have here no opening and closing balances. It's quite similar to your direct labor in that sense. And then you're looking at anything that is the incurred in the factory but is not direct in nature. So any cost that is incurred within the factory space, but it's not direct material and it's not direct labor. So you obviously then need to sift through your figures and identify what that would be. However, before we start putting in the figures there for your factory overhead, I'm going to quickly roughly draw up the indirect material note. Now, the indirect material note will work in the same way as your direct material, but it's indirect material. So it works in the same sense that it could have an opening and closing balance. It could have purchases that were made for your indirect material and so on. I'm just going to roughly draw it up because they didn't actually ask you for it. And there is actually no such thing as an indirect material note, but I do need to calculate it to get the figure for your overheads. So if they don't specifically tell you under your transactions that this was the indirect material that was issued to the factory, then you will have to do this. You'll have to roughly draw up your indirect material note. But if they do tell you in your transactions, like they did here with direct material, they said this was the material issued to the factory. Then if they said indirect material issued to the factory, you'll just take that amount and put it into the overhead note. But again, they didn't here, so you needed to specifically calculate the value, so you have to draw up the note. So it starts with any opening balances of your indirect material. They gave you one here that was 4,150 as your opening balance. So I'm just going to roughly do this because you don't actually need the full note. So 4150 is your opening balance. Then you're looking for any material that's indirect that was purchased. So that's here, indirect materials purchased 78,000. That will be added on. So I'm just going to say purchased. They didn't tell you whether it was in cash or credit, so I'm just going to say purchases. Then you'll look for any railage, carriage, and so on. There was the railage charge, 18,000 Rand. So I'm going to say railage, and that was 18,000. And then you're going to look for any closing balance to subtract from your indirect material. And let's check if they gave you a closing balance. So here is your indirect material, and they did give you the figure. It was 22,500. Sorry, let me just erase the writing there so you can see that. Writing there so you can see that. Okay, so here's the indirect material figure, the 22,500. Okay, so that would be the figure that would go in here, minus 22,500. The final figure of this will be the amount that goes to your manufacturing overheads or factory overheads. So 4150 plus 78 plus 18,000 minus the 22,500 would tell you that the amount going to overheads is 77,650. So now that you have your indirect material value, you're going to put that into your overheads. That will be the first item. So indirect material, and you're going to say that that was the 77,650. You literally just needed that last amount, but obviously there was a bit of work that needed to be done for it. So now that you're done with your indirect material, let's look at any other form of overheads. So for your overheads, the next item that would go into it, remember anything relating to the factory. So indirect labor would be the next figure. And remember 80% was direct, so the remaining 20% would be indirect. So you would say 420,000 times 20% for your indirect labor. I'm just going to say IL so that I can show the working out, but you'll obviously write out the whole words indirect labor. So indirect labor is then 84,000, but you also need to look at was there any medical aid, UIF, and so on. So here, let's look at if there was. There was medical aid and UIF. So medical aid was 720, UIF for indirect labor was 6750. So add on the 720 and add on the 6750, and that tells you that your indirect labor is 91,470. Then your next item under your indirect labor is your under your overheads is electricity for the factory. That was 140,000 rand. So I'm just going to write out in short form electricity. Actually, I have space to write out the whole thing. That's 140,000. Then the next item was insurance. For the factory, it was 75,000. So you're going to say insurance, and that was 75,000. Then the next one was maintenance of the factory. That was 102,250. So here, maintenance. So 102,250. And then the next one was your, let's look at it. So you had rent for the factory. The factory takes up 70% of the floor space. So after 68,000, and again, you need to show the working out where necessary. So 68,000 times 70%, and that would tell us that the rent is 47,600. And then the last one, I think it was depreciation on your factory machinery. Yes, so here depreciation on your factory equipment, 48,000 rand. So as long as it's within the factory, it will be included in these costs. So here you have depreciation. As long as it's in the factory and it's not direct in nature, it will be included here. So depreciation on your factory equipment was 48,000 rand. So now you can total up this. So here you will have for your factory overheads a total of 581,970. And that actually goes into your figure here in your production statement, 581,970. And then as I said, you can either add this figure, that total of material and labor, and then the overhead figure to give you the total manufacturing cost, or you can simply just add those last three. So these three here, and those will also give you the same total for your total manufacturing. These three here, and those will also give you the same total for your total manufacturing cost. So your total manufacturing cost then is 1,069,300. And now we can actually work with this production statement. So now for your production statement, you have the first part of it. The only thing you need to do is add your work in process opening balance. Let's look at what it is here. So I actually just need to erase this from the top. So your opening work in process balance could also be called unfinished inventory. So here, your opening work in process balance was work in process inventory 18,000. So you're going to put in the 18,000 here, that's added on, and then you're subtracting your closing balance of your work in process. Here it is here, closing balance of your work in process, which as I said is also labeled unfinished goods on hand or unfinished inventory, and that is 60,000. So less the 60,000, and that now is going to give you the last figure, which is your cost of production of your finished goods, and that's 1,027,300. So once you have that, you can now draw up note number 4. So I'm going to erase note number 3 here. And remember, it had to be done in the sequence. So that's why we did material, overhead, labor, and then we did your production statement. And now we completed your production statement in order to do note number 4, which, as I said, is the cost of your finished goods. So your cost of your finished goods then starts off with your opening balance of your finished goods. So opening balance of finished goods. You add on the last item from your production statement, which is the cost of production of your finished goods. And then you subtract your closing balance of your finished goods. This basically tells you the cost of sales figure, which is also known as cost of finished goods sold. So here, sorry, I'm just going to take out the numbers here. All right, it's more next to it. 1, 2, 3, 4, 5, and then last, your trading statement. So at the moment, we're on step 5, which is your cost of finished goods. So now you're looking for an opening balance. So here they did give this to you. Your opening balance of your finished goods inventory is 30,000. So you can plug in the 30,000 here. Then from your production statement, the last item, the cost of production of your finished goods, 1,027,300, you're adding on, and then you're subtracting any closing balance for your finished goods. So finished goods inventory, a negative, remember it's a negative, so 72,500. Well, it's not negative, you're actually just subtracting it, and that would give you the figure of 984,800. And then once you have that, the last thing to do is your trading statement. So I'm going to take out the production statement from the bottom here, and I'm going to draw up your trading statement now. So your trading statement is also based on note number 4. There's the last item that will be used in your trading statement. So you will label it trading statement of whatever company. So in this case, it's Ultimate Limited or Ultimate Industrial Limited for year ended, and it's 31st August 2020. And you'll draw up your trading statement. It's actually a very short one. You will take your sales, net sales, less your cost of sales, and this will give you your gross profit. So your cost of sales comes from note number 4. Your cost of sales is subtracted from your sales. That is the last. Your cost of sales is subtracted from your sales. That is the last figure in your cost of sales, which is this amount, the 984,800. So the 984,800 is here. Your sales must always be net sales. Net sales, and I'm just going to write the word net above it. Net sales is your sales less your returns. So here you need to look at, is there any returns? So from the information provided in terms of your sales and your returns, you're looking at, so here's the sales of your finished products, 1,750,000. Here's returns at the bottom, 72,000. So you must show the working out of that as well. So within brackets, you'll say 1,750,000 minus the 72,000, and that would give you 1,678,000. And then that less your cost of sales will give you your gross profit of 693,200. And that is your entire question based on your 4 notes, as well as your trading statement and your production statement, your production cost statement. Okay, so please do have a look at the additional examples in your textbook. There are additional examples. Try those out as well. Get a feel for what this looks like. There also will be an NSS session ahead of your exam where Cheryl will be taking you through the past paper. So please do attend that as well. I will let you know when it is taking place. But for now, please do practice more examples of these. They're in your textbook. Thank you, everyone, and enjoy the rest of your evening.